Back with closing trades right here in ET now. Half an hour to go before a day's break tomorrow. NBCC still looking good. There's Max Healthcare, which is holding out in trade. And then, of course, it's FMCG, which is the island of safety today. So be it in Nestle, Unilever, Tata Consumer, Cottage Consumer Products, Britannia, all of these names are holding out very, very smartly in trade. In fact, there's, I think, only one sector which is in the green, and there's got to be FMCG. Yes, there is relative, outperformance, if you can call it that, with realty, infrastructure, automobiles, and maybe to some degree cement as well, but nothing like FMCG today. Let's welcome on board Nagraj Shetty as well. Nagraj, hi, afternoon. Thanks for joining in, and apologies to keep you waiting. But just wanted to understand whether you see the strength in FMCG continue, or do you think whenever the markets stabilize, it will cave in?
Hi, good afternoon. FMCG has been a defensive stock. Recently, we have seen some good outperformance in the sector itself, and very interesting names like HUL, Dabur, Britannia, and they are also likely to continue their upside momentum in the near term. The overall chart pattern of the FMCG sector is looking positive.
Right, but let's actually put the spotlight on the FMCG sector in depth, given the fact that it's been gaining momentum in a very weak market, because you have the RBI rate cut coming in, you have the reduced inflation forecast as well, and also let's not forget that you'll have the budget tax bonanza as well. But what's aiding the sector in today's trading session? Let me get on board Snehi for that.
Absolutely. So lots of reasons why the FMCG sector is in focus today and is also doing pretty well in today's trading session. First up, like you mentioned, let's talk about the RBI action and the RBI moves that we've heard today. MPC has cut repo rate by 25 bips to now bring it down to 6%, and this is a very positive development when it comes to the entire consumption sector. Governor Malhotra's comments also, if we go and revisit, he said that the prospects of the agricultural sector in FY26 remain bright, and on the back of these bright agri sector prospects, rural development is expected to pick up and do very well. So on that front, if you take a look at stocks that are largely rural facing, the likes of Imami, you have the likes of HUL and Nestle for that matter, all of these stocks are doing pretty well in today's trade. And he also said that urban consumption is picking up with an uptick in discretionary spending. What's key to remember is that the budget boost that we had seen when the budget was announced in February, the tax easing that we had seen, that impact on consumption was expected to be seen from Q1 FY26, but we're already seeing that update in Q4 FY25 itself, based on the Q4 updates that the companies, some of the FMCG companies have provided us. So that effect has come in early, which is another big positive for the consumption space. Second, let's talk about monsoons. This year, SkyMat has predicted a normal monsoon for India, and they've also said that the La Nina will be weak this year and the duration of that will also be short. So another positive development for the consumption space. And lastly, let's just briefly touch upon the Q4 updates we've seen so far. Good set of updates coming in from Godrej Consumers and Marico as well. Both of them have said that their volumes are going to look better in the quarter that went by. Overall, from the entire consumption pack as well, Titan has given very good set of Q4 updates. Meanwhile, Dabur and Trent have been slightly weak, but nonetheless, it's been overall a good set of updates coming in for Q4 for consumption. And on the back of all of these reasons, Nifty FMCG is outperforming all the other sectors and doing very well in today's trade.
Right, okay, that's about FMCG. Let's welcome on board Varun Goel as well, Senior Fund Manager Equity at Mirae Asset, joining in on the show right now. Varun, hi, afternoon. How is it that you're looking at the market right now? Still got to have clarity on tariffs. But other than that, given the construct of the Indian market and given that we've already had quite a savage fall behind us, how are you looking at the market construct?
Good afternoon, Aisha. Thank you so much for having me on the show. I think if you look at the Indian markets and the overall Indian economy, I think the three large positive factors. One, of course, is the significant rate cuts and the liquidity easing that we're seeing from RBI. Our sense is, post this 50 basis points of cut that we've seen in February and this month, we may see another 50 basis points. Second, I think the tax cuts that were announced in the budget. And third, I think if we have a good monsoon, all the three things will have a positive impact, and the cyclical slowdown that we were seeing in the economy in the last 3 to 4 quarters can reverse. Of course, there might be some headwinds coming from the evolving global situation regarding the tariffs. I think while the first order impact to India is fairly limited, if the US economy were to slow down materially, there could be some impact on India's economic growth too. So that is something that we have to keep in mind. So from a portfolio construct perspective, we are focusing more on the domestic focus stories. Our sense is, after a 2-3% earnings growth last year, we could be seeing more like 10-12% earnings growth this year. Of course, the global situation is fluid and one needs to keep an eye on that. But broadly, we believe the domestic situation continues to improve, and barring any large global shock, I think India's economy should do well this year.
Coming to you back again, actually, Varun, I just wanted to get your take on the fact that the way how the FMCG index is actually panning out in today's trading session. Do you think it's an indication that the fact that people are thinking about the medium to long term and now maybe the consumption pack is the way to go?
Well, I think the sector has underperformed for the last few years and the valuations have become relatively better. I think 2-3 things which we believe should improve this year is one, of course, is the demand outlook. Second, I think if the commodity prices continue to cool off, there could be some margin benefits. I think last year, especially crude and palm oil linked inflation was there, which was eating into the margin of some of these companies, and there was down trading because of the big price hikes that were taken that last 12 to 18 months. Some of these things could reverse this year, based on which we could see a healthy low double-digit kind of earnings growth for the sector as a whole, and that would definitely be a lot better than what we saw last year. So I think incrementally things are definitely getting better, and if we have a good monsoon, that would definitely boost demand further. So we would be constructive on the FMCG space for the next 12 to 18 months.
Okay, constructive on FMCG, but what's looking like the weakest link? Let's revisit what IT is up to ahead of TCS's numbers, and whether or not you're seeing pressure continue on some of the IT pack. Clearly, the index is still lower. 2.25% lower is where the index is right now. And then let's bring up individually TCS as well ahead of its numbers and see how that has been doing. But Nagaraj, wanted to get your sense in on the charts when it comes to some of these IT plays, and in particular TCS ahead of its numbers.
Chartically, TCS seems to have found a bottom at the lower levels, and I think last 5-6 sessions downward correction seems to be over for the stock, and last 2 sessions of consolidation will be concluded in the next 1 or 2 sessions. We could see some sizable upside bounce in the TCS in the near term.
The view coming in on TCS on the charts, but at least actually let's get on board Ansh to talk about TCS, what we're expecting for the quarter gone by and what the street is anticipating for TCS. Ansh, over to you.
Well, TCS is expected to report soft quarter with modest growth. In terms of a dollar, we are seeing that revenue is estimated to be at $7,489 million, which is down by around 0.7% sequentially. Now, the dip is mainly due to ramp down in BSNL deal and fewer working days during the quarter. However, in rupee terms, we are seeing that revenue is expected to rise by around 1.4% to 64,856 crore, whereas EBIT is likely to come in at 16,123 crore, showing a 3% increase sequentially. Also, margin may expand by 40 basis points to 24.9%, and this would be mainly supported by improved operational efficiency and reduced contribution from BSNL deal. Lastly, net profit is projected at 12,650 crore, which is up by around 2.2% on quarter-on-quarter basis. Apart from this, 5 other key things to watch out for are: first, management commentary on demand environment; second, total contract value of deal wins; third, trends in headcount and attrition; fourth, updates on Gen AI initiative; and last, growth outlook in US and European market, because these 2 regions contribute to around 80% of the total revenue.
Okay, that's the anticipation from IT. Let's see what some of the other weak pockets are doing. Kunal, what about metal? Of course, it got really battered, but I don't see any sort of rebound also kicking in.
Yeah, no major rebound. Even the larger cap names, the likes of Tata Steel and JSW Steel, they've actually started to show signs of incredible weakness for them. These stocks have broken below their critical moving average supports, price supports. For example, Tata Steel was looking quite strong about that 140, 145 mark. Those supports have been broken. The stock has fallen below the 200 as well as the 50-day moving average, and I believe that this indicates that the pain could be a lot more elongated for many of these stocks, and you might probably expect that these stocks would be at the brunt of some more selling pressure in case if the global markets continue to have this kind of a negativity. regarding the tariff recession, etc. So I would believe that the metal stocks are not the ones which are in favor. They had a fantastic time, I think, till the last 2-3 months, where many of these metal stocks rallied up 20-25% plus from their January lows. But I think now the tide seems to have turned over there.
Nagaraj, let me come to you from the fact that we are talking about metals. Okay, let me come to you actually, Varun, and let me get your view actually when you talk about the fact that how the pharma space is actually looking to you at this point in time, given the fact that the next sector that Trump has outrightly indicated that there will be major tariffs on would be pharmaceutical sector, but he did mention the fact that it will be heavily on China and other nations as well. Do you think that we should get too perturbed about this?
Well, it's very difficult to say what exactly will be the quantum of tariffs on the pharma space. I think continue to like companies which are focused towards the domestic formulation market. I think the space there continues to see good, low double-digit kind of a growth. As far as the whole US generic opportunity is concerned, I think any big tariff on that space will be very difficult to sustain, considering the scarcity of drugs in the North American region. So we do not expect a very large tariff, but then it's very difficult to predict at this point of time. As far as the Indian CRAMS opportunity is concerned, I think the sector has a lot of legs. I think there is a big business race for a lot of these companies to get more incremental business as more and more research is outsourced across the world. So we believe the prospects of that sector continue to be quite healthy, and while there might be some short-term concerns because of tariff, from a medium to long-term perspective, we expect the CRAMS space to do quite well.
Right, okay, that's the take coming in on pharma right now, which of course is seeing a knee-jerk reaction today. Some of course are falling a lot more, like a Biocon for instance, or for that matter, even a Glenmark. But what's holding out today are names like a Hudco, NBCC. They are also looking up in trade. I can't say the same about, the biggest of them all, that's L&T, because that's still weighing heavy. But it's also because they do have global exposure too. Varun, how would you map some of these, infra and realty plays? Do you think that if the markets were to fall further, would also have wealth effect, dampening sales, at least when it comes to residential realty plays?
Yeah, I think as far as the residential real estate is concerned, we still continue to be in an upcycle. I think we have to look at it from an affordability perspective. If we look at the EMI to take home salary ratio, with the recent rate cuts, it actually become more affordable. I think the EMI to take home salary ratio is running at around 35-36%. And the last time the cycle peaked, it was around 43-44%. So I think the cycle has a long way to go. In the short term, yes, because of the correction in the equity markets and the general uncertainty that we are seeing about the growth outlook, we may see some slowdown for the next couple of quarters. But broadly, we believe the medium-term outlook remains intact. As far as the capital goods space is concerned, I think one has to be more discerning. Some of the engineering companies had export orders, especially to American market, and some of those could be impacted because of the tariff issue. Those companies which are geared more towards the domestic market, whether it's roads, whether it's engineering, whether it's defense, that sector is safer, and we believe that can deliver a decent growth from a medium to long-term perspective.
So that's the take coming in on the entire infra space. Actually, let's take a look at what the OMCs are doing in trade today. The likes of HPCL, BPCL, IOC in today's trading session, most of them are in the positive territory. You also have Citi that's come out with a note where they say they believe that the government will use the recent gains in the excise duty hike on the petrol and diesel to offset the LPG losses for OMCs, and on back of that, they believe that HPCL's valuations remain attractive. So on back of that, they have a positive rating for HPCL in particular. But Kunal, I wanted to get your view on the OMC pack, and would that be a space that one should look out for at this point in time, and would HPCL trump that entire basket for you?
See, HPCL strongly has been an outperformer. Now, even if you do a very simple technical comparison, that HPCL is the only stock in the OMC pack out of the three names, which is now trading above its 200-day moving average. Compare this with the likes of IOC, BPCL. I think these stocks are almost 5% to 10% away or below their long-term moving averages. So that itself indicates that HPCL has been a stock which has been a lot more consistent as well as strong on a relative strength basis. Many of these stocks, in fact, all three of the names are showing signs of a breakout. there has been good volume. I think a couple of days back there was some news flow regarding the fuel cut prices or the increase in excise duty prices that led to some bit of volatility. But then when we look at this post and pre the news flow, the average volumes for these stocks have been on the higher side. So that indicates that we probably are seeing some bit of stronger participation for the OMC pack. Yes, HPCL is one of the stronger names from the entire pack as of now. Looking at the charts, we can expect that maybe the stock could be good for a swing upside 5% to 7%.
Okay, that's the take coming in on OMCs. Varun, what's your own thought on some of these crude sensitives? Pains have been really beaten down. Do you think that could be a good contra call?
Yeah, I think crude below $75 a barrel is a big positive for India. I think both from a fiscal and an inflation perspective. I think oil marketing companies will definitely benefit as they see expansion in their marketing margins. I think despite the recent increase in excise duty, they are still making a very, very healthy marketing margin on both petrol and diesel, and that should definitely boost their finances in the short to medium term. I think along with that, I think FMCG companies will clearly be big beneficiary of the decline in crude oil prices, where again we could see some margin tailwinds.
Coming in on the OMCs and also the fact that the pains as well, they are bucking the market decline in today's trading session. Let's not forget that the decline in the crude oil prices is good for those who have crude as their one of their raw materials. So you have Asian Paints, Berger Paints, Kansai Nerolac, all of them trying to actually buck the overall market trend in particular. But let's take a look at some of the other counters. Like I mentioned, yes, ONGC, Oil India are the ones that are declining in trade today. You also have the likes of Credit Access, Ujjivan, that were actually bucking the overall market trend on back of the fact that you have a positive note coming in for Investec. They see the improve in the asset quality. You have Mahindra that was rising on back of the new order coming in from Airbus helicopters. So that one is just trying to hold on to that positive territory, actually flat on the positive bias. But these are some of the counters to watch out for. I wanted to understand gold loan companies, Kunal, how are they looking to you on the charts given the fact that RBI has proposed some sort of a relook at the regulations, though you have like the likes of Muthoot Finance, Manappuram Finance are the counters to look out for. Though the RBI governor did mention the fact they're not looking for tighter loans when you come to gold loans. What's your take? How are these companies looking to you?
No, I'll take that as a positive, if in case these stocks go into a correction, because Muthoot Finance, for example, is one of the stock which has been more stable. It really does get into that 10-15% swing lows for the stock, and even in this last, I think 6-7 months, for example, the stock had been holding on to its longer term average, the 200 moving average, for example. So with opportunities where these stocks correct 10-15%, say on a single day or a couple of days, I think I would probably look that as an opportunity to go for a contra buy. Manappuram Finance, on the other hand, the stock is a lot more volatile. I think the only good part about the stock so far is that it's built a very strong base for itself about the 220 mark. In the historical charts, when we look at it, 220 had been a major resistance for Manappuram Finance, and the stock took a lot of time to break past about those levels. So which means that maybe mild corrections towards 220 mark could be a good buying opportunity.
In fact, it's quite surprising that these gold stocks haven't quite recovered, or financiers, I should say, given that the RBI Governor Sanjay Malhotra in his press conference actually clarified talking about gold loans provided by both banks and NBFCs, and said that while tightening of norms is not on the cards, the RBI is only looking at issuing a comprehensive guideline setwork or framework to on provisional norms for such loans.
To our mind, there is no tightening. It is a rationalization only. It's broadly an extension of whatever on the conduct side primarily, whatever were the guidelines for NBFCs, those have been extended now to the banking sector also.
Right, so that's the RBI governor talking about all the gold loans. And also remember that when you had the MPC speech or the governor's speech at that point in time, you saw a lot of these stocks actually tank in trade, try to recover a tad bit, but that recovery was not sustained. If you look at most of them actually trading lower by about 5 to 8%, 7%, 5 to 7% also at this point in time. But coming to you actually, Vinay, I wanted to understand, Varun, I beg your pardon, I wanted to understand your views on all of these gold financiers, and not just gold financiers. I wanted to know your view on the entire NBFC space. How are you viewing this one? Because a lot of talks were going around the fact that there is an issue when you talk about the personal loan front, there's an MFI issue, and there was a lot of issue when you talk about the unsecured loan segment, and that's one of the reasons why people didn't want to actually look at the entire MFI space. How are you viewing this one, and how do you look at the entire NBFC space in particular? Sorry.
I think we're fairly constructive on the NBFC space at this point of time. I think last few months we have seen significant easing of regulatory norms by the regulator as far as the space is concerned. We have seen, of course, not just the rate action, but we also seen easing of liquidity conditions. I know some changes that were made to risk weights earlier have been kind of reversed. I think incrementally, as the rate cuts seep through the system, we expect credit growth to get better. I think with the change in tax rates, I think we expect a significant amount of deposits also to come into the banking system, and that should also boost liquidity and the deposit side for a lot of these NBFCs. So I think broadly things are looking positive, and we would be constructive on the space as a whole. I think vehicle finance companies, gold loan companies should continue to do well in the current environment.
Okay, that's the take coming on some of those gold financiers. But other than that, it's pretty sedate. I mean, sectorally, there's only FMCG, which is holding out definitively. Reliance, yes, quiet right now. But Kunal, it's fallen also a lot, right? It's now at 1187 thereabouts in the futures. Makes sense to buy?
Yeah, it's a good stock to buy at current levels purely because of the risk reward and the way the stock could probably offer some good short-term trading opportunities. But as I was indicating earlier, that I don't see any major turnaround of sorts for the stock price. What the move has been lacking for Reliance Industries in this last 2-3 months, when there have been phases when the stock has moved up higher, is an absolute lack of volume into the stock, lack of open interest built up into the stock. So I think that is one of the major concerns. Short term wise, yes, 1200, 1225 could be an immediate target for Reliance Industries.
Okay, and what about your BTST ideas?
So I'll go with two buy calls. The first one is about Deepak Fertilizer. That's a chart which is showing signs of a consolidation breakout. Would look out for targets in the range of 1175, stop loss at 1135. And BEML is the other stock which is looking attractive. Targets of 3050, stop loss at 2950.
All right, so those are the BTST ideas coming in from Kunal on that note. Thank you so much, Varun, for joining us on the show, as well as Kunal.